First off, we're going to start off by asking the two of you about the fundamentals. We're going to start with Sian Yang. So Sian Yang, some good reminders for all our investors here, especially those who are new to REITs. What does it mean to own shares in a REIT? Does it make me a landlord?
Good morning, everyone. Good to see all of you here this morning. So the question is, why invest in REITs, right? So I think this was a very unique product that, thanks to the SGX, brought to the Singapore market. So assets are usually very chunky. Assets are usually very, very big. In fact, even if you wanted to buy a prominent asset like, for example, I run Keppel REIT, we own buildings such as Ocean Financial Centre, One Raffles Quay, Marina Bay Financial Centre. It is not possible, even if you have billions to spare, you cannot buy into these assets. But through a REIT product, investors can, for as little as 100 shares, participate in the joint ownership of such a pool of assets through a trust scheme. So these assets are usually very, very good assets that you can't actually get, but you can participate in these pool of assets. You can get regular distributions. You can choose what you want. In fact, in the market today, there are 40 REITs and trusts. You can buy into any sector that you want. You can be able to buy and sell any of these REITs very, very quickly. You don't have to pay stamp duties, for example. So it is actually a very good product. It's a very liquid product. And of course, over time, you do want to see appreciation in the share price. And I think just now our speakers have also mentioned this is probably a very good time to be buying into REITs because most of the REITs are trading at a discount to book. For example, I think just now Yao Loong was mentioning that the REITs are trading around 0.7 times book. The distribution yield is in excess of 6%. And of course, if you look at your T-bills today, you look at your Singapore government bonds, they are only generating, 2+%. So there is a 400 bip spread. So it is a very good time, I believe, for investors to sort of put more money into REITs, and hopefully all of us will be making a lot more money.
Thank you, Sian Yang. Folks, Sian Yang is not just the president of REITs, he's the CEO of Keppel REIT, okay? And they've got a bunch of REITs under their umbrella in their family. They invest in very different things. So depending on what you're interested in, do check that out. Also, great points there. Thank you for mentioning that. I think a lot of you who went to check out the fixed deposit rates recently would have been very disappointed. We're going to move on to Yao Loong now. Yao Loong, before people get into REITs, I think it's a good reminder to them to find out what are some key differences between REITs and normal stocks that people need to keep in mind.
So I think Sian Yang sort of gave a good overview of REITs, right? So when I look at a REIT, it is a structure designed to hold hard assets or fixed assets. Then for our structures, most of the managers are outside of their REIT. So it's what we call an externally managed REIT, right? So it's somewhat different from a company. The company will have the management typically inside the company, right? So this is just a feature, a design feature of our S-REIT system. And I think what that means is that for REITs, especially those with managers with strong sponsors, you can look at the pipeline that can come in. Some of the managers with strong sponsors clearly benefit from that, right? So that's something that's quite, I would say, quite unique. Then the second thing would be clearly there's a set of rules around REITs. Because it is tax transparent, i.e. the REIT doesn't have to pay tax, then the net operating income just flows down after paying the interest expense and then it gets distributed. So there are rules around leverage. I think there are rules around development, how much sort of non-income producing development you can do. There are rules around the minimum level of distribution in order to enjoy the tax transparency. And the REIT manager is also regulated by the Monetary Authority of Singapore. So these are the sort of different features or structural features of a REIT compared to, let's say, a company. But that said, the REIT's instruments are designed to be traded like shares. So the way you buy let's say, a bank share and a REIT, we call a REIT unit, is not very different. It's traded, there's a quote out there, you go through exactly the same broker channels that you would normally use to access your share portfolio.
Thanks for that, Yao Loong. We're going to go back to Sian Yang now. We're going to ask you to put on your President of REITs hat. Could you share with us, what is the current landscape of Singapore REITs?
Singapore is one of the largest and most dynamic in Asia. We have around 40 listed REITs and trusts in Singapore with a combined market cap of around 90 billion. 90 billion is actually quite a big number. It's around 10% of all the total listed stocks here before. We have a variety of REITs. Investors can look to invest in any sector that you want. Of course, there are office REITs, diversified REITs, industrial logistics, hospitality, data centers. So there is really something for everyone. So we want to at least something we would like to see is more listings in Singapore, offering more products, offerings to investors so that everyone can pick what they want.
Thank you very much for that. Yes, very true. There is literally something for everyone. If you want to invest in data centers, we've got something for you. You want to invest in office buildings, we've got something for you. You want to invest in shopping centers, you invest in hospitals, we've got something for you. Right? So it's really diversified and it's really strong as well. Yao Loong, I'm going to come back to you on this one because Singapore is seen as a global REIT hub. And what are some of the strengths of Singapore in that respect?
REITs, there are REITs regimes around the world, right? So it's the rules are actually pretty similar. A certain proportion of income, you need to hold a certain proportion of income-producing assets. Some of them have leverage limits, and then you need to distribute most of the net property income post payment of your interest expense to the investors. So I would not say the REIT regime here is unique in terms of the rules, but I think what has set it apart is the sponsors, right? These are the people who manage the assets, extract greater yield. Because we see listed REIT regimes throughout Asia and throughout even in global, right? Whether it's Japan, US. But why has the regime in Singapore done well? And I think a large part of it, I will have to give credit to the sponsors because they are the guys that manage the assets, acquire new assets, and hopefully at a accretive yield. And that drives returns, right? So the responsible sponsors and managers that have been heavily involved in the REIT sector, I think that's the key determinant. The rules are the same or similar everywhere else, right? It is the sponsors like whether it's Keppel, and I know you know some of the names, that have been able to extract greater value out of the assets, and then as a result of what they do, they then distribute it to the unit holders. And I think that's what differentiates our regime and then attracts other whether it's property managers or property owners to say, look, I think Singapore is a good viable listing location to put my assets here because it's got a good reputation and there's an educated investor base, both on the retail and institutional front, to be able to raise capital and to be able to have that conversations to support the growth of the REITs here.
Thanks for that, Yao Loong. I'm going to come back to you later about comparing investing in REITs in Singapore versus in other countries. But next up, Sian Yang, I'm going to ask about, over at REITs, what initiatives do you have in place to encourage retail investor participation in REITs in Singapore?
Oh, wow. We could go on forever, but actually REITs has been doing a lot it's not just retail investors, institutional investors, because just pure retail investors, investing is not quite enough. We need everyone to be investing. We need to promote a lot more trading liquidity in the market, for example. So I can run through some of the initiatives that REITs is sort of working on. Just now you saw REITs on the Move is obviously a new initiative that we are doing, but we do a lot of investor education events. We do a lot of seminars, webinars with partners such as SGX Academy, for example. We do a lot of engagement with investors. This is one of our flagship events that we do on a yearly basis. We have done this for 11 years. We will continue to want to do this for as long as we can. So obviously, we also want to engage with all pools of investors. So we do a lot of events, for example, with banks to meet institutional investors. Earlier this week, many of the REITs also participated in the private banking event that was specifically with DBS. So this year, we are also trying new things. Nupur, our CEO for REITs, has managed to put together a competition, a case study competition, getting 100 students to put up case studies, and in return, they actually get internships at some of the REITs. So we have had a lot of people sign up, more than 100 students have actually signed up. The finals will be next month, so it'll be quite interesting to see what the students can actually come up with. So there are many, many other things, but of course, this is a flagship event that we do on a yearly basis. We hope that you guys will also continue to support this event, and we look forward to seeing you every year.
Thank you for that. So folks, if you're interested, it's REITs, REITAS. Just search for that and you'll be able to see their website. Lots of great events. So do stay up to date on that. I'm going to come back to you, Yao Loong, on this one about investing in REITs in Singapore versus investing overseas. Let's say, for example, I decide to buy a US listed REIT instead of a Singapore listed REIT. What would be quite so different for me? Like, can we talk first about, for example, the taxes we have to pay if we buy a US listed REIT versus a Singapore listed REIT?
Yeah, so I think I'm sure there are many investors here who invest in the US, and you would know that for certain types of stocks that you own, there's a withholding tax. That's their regime, right? On their dividend distribution. So I think that's one key feature of the US, investing in the US market. And of course, when you invest in the UK market, you will have stamp duties as well and so on, right? So each regime or each jurisdiction would have their sort of different regulatory fiscal policies, taxation and so on. But that doesn't just apply to REITs, to be honest. It's shares and other things as well, right? So we know in the Singapore regime, the REIT is tax transparent, and then at the individual investor level, you don't get tax on that as well, right? So that's a good thing, and I think hopefully it encourages people to look, or investors to look at this, and that's could be a differentiator. But again, these things are things you would need to manage or think about as you try and manage your returns and the friction, right? But ultimately, the investing in S-REITs here with the managers, actually they have to set up an office in Singapore because it's a regulated entity, and so they have to set up a physical presence. You actually would have the opportunity to interact with the senior management, the investor relations, and so on, right? So I think that's a great opportunity. I think it's highly unlikely that you would fly all the way to invest, to interact with a US REIT or so on. Maybe you do, I don't know. But in Singapore, we have them physically, they have to be here. And many of them, whether it's individually or through REITs, have gone on a investor engagement drive. That gives many opportunities, right? To be able to actually have that face-to-face engagement.
Thanks for that, Yao Loong. And yes, folks, you'll be able to meet with many of their leaders of these REITs on this stage through this day as well. So we're going to come back to you, Xian Yang, sorry. My bad. I still have great love for our senior minister. So Xian Yang, I'm going to ask you about, we're going to move to macro, and we're going to ask you about the major economic factors. We're in a state right now, the world is, honestly, it's a lot more turbulent than I remember it in any time that I can remember. It's we've got active wars, we've got economic turmoil, we've got things, we have global leaders taking unilateral moves that are fundamentally changing the way economics works in the world. So for REITs, what are the major economic factors with the greatest influence on the REITs in Singapore?
So I think that what we have actually seen in the past few years, the REIT prices have actually dropped by quite a fair bit. That's primarily due to the interest rate environment, because the REITs do take a fair amount of leverage. When interest rates go up, the interest expense will go up, then the profitability of the REITs will actually drop, then reducing the distribution yield. Then, of course, over the past few years, we have seen T-bills, for example, they went up to as high as 3-point-something%. A lot of investors decided to put their money into T-bills because they were generating decent returns. But like what I mentioned earlier, T-bill rates have come down, the bond rates have actually come off. So S-REITs become a lot more compelling today. So I think that what we have actually seen also in the past few years is, notwithstanding the increase in interest, the managers here in Singapore, the REITs, for example, the managers have performed very well. Fundamentally, the assets are doing well, but they are just being burdened by high interest costs. So definitely, once the interest costs start to come off, we have already seen that even though the Fed has kept their rates constant, most of the countries around the world, as recent as this week, Australia brought down their interest rates. So all this will start to provide a lot more respite for the REITs. So we do expect the REITs' performance to actually improve over the next few weeks or months.
Thank you very much. We're going to talk more about interest rates later on in the next session. Yao Loong, I'm going to come back to you on the next question because of time. I need to ask you about this. This is very important. Okay, many of our investors here may be first-time REIT investors. They may have already invested in other stocks. They never invested in REITs in Singapore. What would your advice to them be for first-time REIT investors in Singapore?
Well, I think the choice is actually, the range of choices is pretty wide, right? Compared to when we first started out in early 2000. So sometimes choice is not such a good thing as well, because there are many things you can look at. But I'll say, look at things that you are familiar with. And there are many opportunities for you to look at how the asset is performing just by your day-to-day activities, right? I mean, I was just walking around Suntec itself when I came in, the tenant mix, and things have changed quite a fair bit, although the fountain of wealth is still there and thriving. But ultimately, it has to work for you as a solution. It is not just a product. So a first-time investor, it could be someone with very young and with 20, 30 years of runway before you retire. And so you can afford to look at maybe a different profile of REITs because you have that runway. But for a first-time investor, if you are near retirement and income is important, then you might want to look at assets that might give you a little bit more assurance around the stability of the top line, which is the rental income. What do you think about the rental reversions and so on? That's why we are doing things like the Invest SG together with Chris. I mean, it's a community portal, or whether you want to call it a Facebook equivalent, but it's a social thing where people can come together to share their expertise, and I think that's great for a first-time investor to be able to tap that resource. People who have done it, people who have probably made mistakes, learn from them, and then undertake that investing journey. And it has to be part of a solution, a portfolio. And I do think that, personally speaking, I do think that REITs has a role to play in everybody's personal portfolio.
Thank you very much for that. So folks, make sure you find your community, okay? Don't invest alone. It can be a very lonely thing if you're trying to figure out everything by yourself. There'll be lots of people with more experience, with more knowledge. So do check that out. That's Invest SG, that's outside. One last question for the both of you. I'll start with Sian Yang. Do you have a wish list for the Singapore REIT market? What do you hope to see in our REIT markets in the next 5 to 10 years? How do you think we're going to get there?
Well, we are looking for a lot more REITs to join the party, so we are working with SGX also trying to tell them, let's have more REITs in Singapore, let's have more products out there for the investors to actually do it. But of course, a few things that we would really like to see: interest rates. If once they come off, the REITs will be able to distribute more, then of course our investors will be all getting more dividends. But what's most important is not just about the dividends, right? Everyone wants to make money through buying the REIT. So if you buy today, you make money, everyone's going to be encouraged to buy more. So as more people buy into the REITs and trusts, the price goes up, everyone makes money, then we will have a much more buoyant market. So this is really something that at least the REITs Association of Singapore would like to see, and even as CEO of a REIT myself, we would like to see.
Thanks very much for that, Sian Yang. And Yao Loong, what's your wish list?
Well, I think it's not just REITs, but for the broader stock market in Singapore, we would like to definitely see it a lot more vibrant, a lot more liquidity, and a lot more choices. And I'm pretty sure REITs will continue to be an integral part of our stock market, given its pretty unique characteristics and its track record. So I agree with Sian Yang. Hopefully we have more REITs. We have different sectors. You can get exposure to trends like AI, not just by buying certain GPU type companies, but also through REITs as well, right? So these are different ways where you get exposure to the new trends of the new economy.
Thank you for that. I'm afraid that's all the time we have. Please give a big hand to Mr. Ng Yao Loong and Mr. Chua Sian Yang. Thank you both. Thank you for taking the time to chat with us.